This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Iran will attack Israel's power plants and plants supplying U.S. bases in the Gulf if President Donald Trump carries out his threat to obliterate Iran's power network, the country's Revolutionary Guards said in a statement on Monday. The statement seemingly retracted earlier threats to desalination plants in the region, which are crucial for providing drinking water in Gulf countries. The lying U.S. president has claimed that the Revolutionary Guards intends to attack the water desalination plants and cause hardship to the people of the countries in the region, said the statement shared on state media.
The Strait of Hormuz remains open to all shipping except vessels linked to Iran's enemies. Iranian media reports published on Sunday quoted Iran's representative to the UN Maritime Agency as saying. Ali Mousavi's comments came from an interview published on Friday by Chinese news agency Xinhua, before U.S. President Donald Trump's threat to target Iranian power plants if the strait was not fully open within 48 hours. The threat of Iranian attacks during the U.S.-Israeli war on Iran has kept most ships from getting through the narrow strait, the conduit for around a fifth of global oil and liquefied natural gas supplies, threatening a global energy shock.
Moving on to the top news in the energy sector.
European and U.S. gasoline cargoes are heading to the Asia-Pacific after Asian prices surged on tightening supply due to the U.S.-Israeli war with Iran, according to trade sources and shipping data. The war has disrupted crude and oil product shipments from the Middle East to Asia, causing Asian refineries to cut output and forcing fuel distributors to seek supply from as far as the United States and buy more Russian fuel. The extra shipping costs will exacerbate already soaring fuel prices for consumers and businesses.
China intervened to cushion rising fuel prices on Monday, increasing regulated ceiling prices for retail gasoline and diesel but limiting the hike to about half what would normally be applied under the government's pricing mechanism. However, the adjustments brought on by rising oil prices linked to the U.S.-Israeli war on Iran were still the largest on record, lifting price limits close to levels seen in 2022 following Russia's invasion of Ukraine. The state planner, the National Development and Reform Commission, said on Monday it would raise the maximum retail prices for gasoline and diesel by 1,160 yuan, $167.93, per metric ton and 1,115 yuan per metric ton, respectively, starting from Monday midnight. Next, we have the top news in metal market. Gold slid more than 8% on Monday to hit its lowest level in 4 months, after logging its biggest weekly loss in about 43 years last week, as an escalating Middle East conflict stoked inflation concerns and raised expectations of higher global interest rates. Spot gold declined 6.3% to $4,203.21 per ounce by 0757 GMT. Extending losses into a 9th straight session. It had shed more than 8% to $4,097.99 earlier in the session to its lowest level since November 24. The metal dropped more than 10% last week, its steepest weekly loss since February 1983, and has also retreated about 25% from its record peak of $5,594.82 an ounce reached on January 29.
Iron ore futures rose on Monday, supported by elevated freight rates, while other steel-making ingredients coking coal and coke also gained as countries booked coal cargoes for their energy requirements due to a spike in global oil and gas prices. The most traded May iron ore contract on China's Dalian Commodity Exchange traded 0.92% at 819 yuan, $118.57, a metric ton. The benchmark April iron ore on the Singapore exchange was 0.02% higher at $108.25 a ton, as of 0706 GMT.
We will now look at the top news in the agricultural sector.
Indian sugar mills have returned to the export market, locking in 100,000 metric tons of shipments in a week after a slump in the rupee to a record low and a rally in global prices restored the economics of overseas sales, 5 dealers told Reuters. Shipments from the world's second biggest sugar producer will help Asian and African consumers to secure sugar at lower prices amid rising freight and global prices, which are trading near the highest level in 5 months. The war has suddenly changed everything. It has pushed global sugar prices up in anticipation of higher ethanol demand and dragged the rupee down to a record low, said a Mumbai-based dealer with a global trade house.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.